Well, that's 3 hours more for the monetary policy, or 3 hours and 47 minutes more for the monetary policy to be announced. And my sense is that it's going to be an important cue. Perhaps the markets are waiting for such a cue. We did touch the all-time highs, just for 10 seconds yesterday, but it was a scorching rally before that. And therefore, perhaps a bit of catching of the breath was in order, and the SkyMet news that there is likelihood of a subnormal monsoon gave the market the perfect setting. But the bulls still have a lot of steam left, a lot of liquidity, both foreign and Indian, and therefore, if the policy were to be a little bit of an outlier, a little bit more dovish or generous than what the market is expecting, it's quite possible that it can recharge the bulls. So second half may be more interesting than first half.
Okay, hi Lata, good morning. Hi Anuj, morning. But in terms of numbers, I think the selling that we got both from FIs and DIs yesterday, that was a bit disconcerting, right? I mean, 1,040 crores of selling from FIs yesterday, and that comes after so many days of buying that we've seen. Even from DIs, we got about 81 crores of selling. And like you said, this monsoons being subpar, that's what SkyMet has said, that monsoons could be subpar this year. That is a bit of a bother, along with the way crude has been moving. Anuj, morning. What's the prognosis for today? We have this big event coming up, but before that, the SGX Nifty is indicating that the start will be in the green. So how does one approach it?
Morning, Sonia. Look, like we were saying, it's a matter of when and not if Nifty hits new high. That's happened, and you got your wish. It happened when you were in this chair. So it ended at lowest point yesterday on some profit taking. My base case was that the market correction would have happened on RBI policy. It needed some trigger. SkyMet acted as trigger, but give or take one day, you had this correction. I think this FII selling is important because it's the first day of large selling. This rally is driven by FII flows. We should not forget that. So in that sense, while one swallow doesn't make a summer, you want to see whether that continues or not. The market needs some correction and consolidation to be healthy. Corrections happen in two manners. The market price can fall to its moving averages, or it can consolidate and moving averages can move up. One of the two can happen and should happen. Today's market setup needs to be divided into two halves. Up until policy, my sense is with global markets also looking quite okay, and with yesterday's shorts in place, there could be some buying, especially in NBFCs. And I think NBFC is the space to focus on. And after that, we'll take it forward. Now, if the policy is too dovish, if there's a 50 basis point rate cut, then initially the market will celebrate, but that might get sold into. That is my base case. But let's see. I think the market's had a big run, and it needs perhaps some consolidation. But one thing I'm very clear about is that this is not the end of the bull run, not the end of the rally, just perhaps some pause or something.
So that's what, right? It's like scaling the Himalayan peak. Once you reach the peak, then what? So now that we've hit all-time highs, what next? I mean, is it still going to be a vertical rally, or is it going to sort of pause a bit here?
I've never scaled Himalayas, so I hope someday I do. But in between, you have many peaks, right? Who's to say that this is the final peak?
Yeah.
My basic sense is that index stocks may not have too much upside in the near term. You're seeing fatigue in HDFC Bank, for example, even in Reliance at some point. So, and if there's this rate cut cycle, this whole mid-cap rally, I think that's got legs because the rally that we had in 2017 was essentially a cost of capital rally. If that has to revive, I think that could be one space to focus on. And the reason I say that is because the mid-caps and Nifty junior stocks still have valuation comfort. There are a lot of stocks still sitting just about 10% off their 52-week lows, much below their median valuation. So perhaps that could be the area to focus on. Money normally rotates at all-time highs. There's some kind of sector rotation. We've already seen that. Banks, for example, for the last 4 or 5 days have now underperformed.
Yeah.
Bank Nifty. HDFC Limited is outperforming HDFC Bank by some distance. So that's some kind of rotation will happen. Mid-caps and Nifty junior stocks perhaps could be the area to focus on.
Okay, that's what you've been saying for a while, that perhaps there could be this outperformance from mid-caps. But Lata, what is the bond market priced in? Is a 25 basis points rate cut priced in, or now is there a higher possibility of a 50?
Well, it's not just bond markets. It's everybody who has money and playing any market who will be watching I want to pick up on the phrase that Anuj used, cost of capital. We have to really look at what RBI does to the cost of capital. A 25 basis cut, as you say, is priced in by all markets. If they also make it an accommodative stance, at the moment the stance is neutral. It was, tightening only about 2 months back. In the previous policy, it came to neutral. Now, will the governor get a majority vote to change the stance this early? Is a bit of a doubt, but he may still be able to wrangle that. I doubt he will be able to wrangle a 50 basis cut because while he may be convinced, you have to get a majority in the policy, and I don't think a 50 basis cut he will do with a casting vote. Okay. It's an ominous decision. You'll want to take your monetary policy committee with you. So that's why I would work still with the 25 basis and an accommodative stance. When you say accommodative, you mean that I'm going to give a few more cuts. Yeah. So that signal is very important. My sense is that we have to look very closely at what he does to liquidity. Because liquidity is not the MPC's problem. It is entirely the RBI's domain. So if he, along with the policy, gives any indication that liquidity has to move from neutral to surplus. Now, what does it mean in technical terms? Almost every day, banks are on an overnight basis borrowing at the repo window, about 75,000 crore to 1 lakh crore. If it just reverses, and on a few days, banks lend to RBI about, say, 10,000 crore, not a great deal, the bank's psyche will be, oh, I'm giving idle money to RBI. So let me cut my deposit rates, or let me cut my, let me give more loans rather than give it to RBI. Then loan growth picks up. The governor could well play that trick and say that I want liquidity to move a little bit away from neutral towards surplus. Okay. I don't know what words he will use. He could indicate that he will be generous with the dollar swaps and the OMOs. There can be myriad ways. And this is that the April policy is a very important policy. It's not just monetary policy. You also have that other announcement.
So when you say generous with dollar swaps and OMOs, what exactly would you want to hear?
You give money, you give currency into the system by buying bonds. Okay. OMO is the purchase of bonds.
You expect to hear that in the statement itself?
He might indicate that he will continue to keep liquidity robust by doing either dollar swaps or OMOs. If he makes any such statement, so far he has been very careful. Yeah. Whenever he has been ambushed and told that, are you going to do any more dollar swaps? All he says it was a successful intervention. He has not so far indicated that I will go on doing it. If he gives comfort that, banks will not have to run to RBI to borrow, rather they will have enough money to give RBI, that will be a very positive signal. And then, Anuj, that phrase will become operational. Cost of capital will fall. But now I don't know how far the governor chooses to go. The developmental measures, the external benchmarks, something is expected. At the moment, banks set their lending rate for you and me, depending on their cost of money. And RBI has always been saying that's not fair. You have to connect it to the T-bill or to the repo rate, connect it to an external benchmark. Yes. If that becomes law in some fashion, then as well you might see this rally getting unleashed. So there's much in the arsenal. I'm not sure the governor can pull through a 50 basis, given what we know of the MPC guys in the past few months. Therefore, my sense is he will play the liquidity. He could play the liquidity card. The market has something to watch in this policy. It may not be a run-of-the-mill policy.
Okay, well, we just have about 3.5 hours to go before we get to know what is on the governor's mind, and we will analyze that policy in great detail 11:30 a.m. onwards.